Hi, thanks so much for joining in. You're watching BQ Prime. My name is Alex Matthew, and the show that you're watching is Ask BQ. Like the name suggests, the show gets you answers to all of the stock-related questions that you might have. So if you are logged in on any of our social media platforms, then send us your questions on the chat. Or in fact, you should be able to see a WhatsApp number at the bottom of your screen. You can send us a message on that as well. I have access to both, and I'll interact with you directly. We've got a we've got both a fundamental and a technical guest to tell you the answers to all of your questions. We've got Dharmesh Kant joining in right now. Dharmesh, good morning to you, and wish you a very, very happy Diwali to you and your team and your family.
Yeah, good morning, Alex. Wish you and everybody at the team out there, and to all our viewers, a very happy Dhanteras and Diwali. May this year be very auspicious for all of us.
Absolutely, well, viewers, from my side as well, wish you all a very, very happy Diwali. We will soon be joined by Sudeep Shah as well to help you with your technical questions. But as we start, Dharmesh, I'm looking at the markets. We've been trading a very narrow range. I think the last couple of days also we've seen that, and I guess we're waiting for some overarching cues to play out in the global markets or even domestically. But for now, let's focus on this one stock which I've selected, which is Muthoot Finance, just to lay the context or to set it up today. And we're talking about earnings. This is a stock that is under pressure because it's missed the expectations. What was your reading of the numbers? The net profit is coming at 991 crore rupees, which is up about 14%, but it's missed estimates. What did you read from this?
Yeah, Alex, see, the type of earnings which has panned out so far in Q2 has there is hardly any margin of error as far as reported earnings are concerned from the expectation point of view. So earnings per se is good. I mean, 14% growth on a Y-on-Y basis for a financial company is not great, considering the fact if you look at the other basket and the aggregate itself speaks about 30% kind of an Y-on-Y growth for all the financial space. So that is the kind of earnings play out which has been there for most of the banking and NBFC space kind of a company. So we did an aggregate of around 50 companies. So this was a story out there. And 8-9% was quarter-on-quarter growth. So when compared to that, this number looks not pretty attractive. And that is the reason some profit taking is happening. At the same time, the valuations of the market is now fairly priced or near to one standard deviation. So the margin of error is not there. I mean, there won't be any leeway out there, and that is the reason why we are seeing this profit-taking pressure. And as on the onset, you suggested two things. One is the global events, and the second one is the domestic event, which are the macro events, and they are overarching definitely likely to play out. So here it is that kind of activity happening. Nothing wrong with the company or our earnings on a normal basis.
Okay, fantastic. We have a couple of questions that have already started trickling in. So let me start with the first question. It's a recent listing, Mama Earth. I think there's a lot of conversation that has gone into this already, Dharmesh, for a company that is just about listed, but it has seen some cuts in the last 4 or 5 trading sessions, as much as we've seen, right? And it's come off already quite substantially. The question that Sonu is asking is Honasa worth buying at the current price, or should you wait for more correction? What did you make of the listing price and of the valuations that were quoted?
The valuations are exorbitant. It was never, I mean, justified to start with. And I don't think substantial cut has happened. Substantial cut is about to happen. It's likely to be the case. So because it's the end of the day, it's a product company. And in product company, you can't justify such kind of an sky-high rocket valuations. At best, they can grow is like 15 to 17%. That is my own understanding of the company. And that was the reason why we did not came out with a buy IPO note on this company. We went through it, we did a deep dive, and eventually we realized let the prices come down. And my own sense is it should correct around 50 to 60% before some value will emerge. So that kind of a correction I am seeing on this company post-listing.
Okay, fair point. We've also, I believe, got Sudeep joining in. Sudeep, thanks so much for taking the time. And from all of us here at BQ Prime, here's wishing you, your team, and your family a very, very happy Diwali and a prosperous new year. I was asking Dharmesh a short while back about the view on Muthoot because it's under a little bit of pressure today, or at least it was earlier in the session. What are the key levels to watch here?
Good morning, Alex, and wishing you and your family and everyone at BQ Prime a very happy Diwali and a prosperous new year ahead. And I really hope that this coming year be the best year for all of us into the equity markets and for our own personal lives also. So, just coming to Muthoot Finance, Alex, what I feel is that see overall after a correction, say if you see from higher levels from 1700 to roughly 900 levels in the last 6 months prior to that, we've seen a rally now. That's a significant rally from 900 to 1270, 1300 kind of levels. But what we are witnessing today is that this stock from lower levels has witnessed a rebound, and I feel currently till 1250, 1240 level holds on this. There are chances that we might see a rebound back up to 1300, 1320 on the upside. So, see, last few days there was a significant long build up in this stock. Now, today's negative price reaction has been absorbed, and I feel overall 1250, 1240 zone could act as a strong support going on from here.
Okay. Why don't you also take us through the key technical levels for the benchmark as well? We're not seeing too much of a movement right now, and we've seen a quiet couple of days, quiet end to the weekly expiry as well. What are the key levels to watch both for the Nifty 50 and the Bank Nifty?
Yeah, so firstly, let's take Nifty. Now, what we've seen in case of Nifty is that Nifty has rallied from 18,830 to almost 19,450 kind of levels. Now, if we map 23% retracement also, that comes to around somewhere around 19,250, 19,260 levels. So that positionally will now act as an important support. Also, not to forget 19,350, 19,355 zone, which is the 20-day exponential moving average, and which is not being significantly breached in the last 3-4 sessions. So I feel till the time this zone of 19,250, 19,300 holds, there could be one move up to 19,525, 19,550 on the upside, and there the real resistance will come in case of Nifty, because that zone of 19,550 is the 50% retracement of the entire fall from 20,200 to 18,830. So I feel broadly the indices are between 19,250 and 19,530 range. Buy on dips should be the view going forward, and a lot of stock specific action is visible, and a lot of opportunities are coming up in a lot of sectors. So keeping Nifty aside, there are a lot of stock specific opportunities, and I feel viewers should be right now concentrating on these stock opportunities which are coming up.
Point. We've got another question from Sonu. He's asking about Sula Vineyards, and this one's for you, Dharmesh. He's asking, can it grow 15 to 20% in the long term? He's not defined what this is, but what's your expectation on the fundamentals, and how do you see this stock performing?
See, fundamentals are good for solar vineyards, and I think the alcohol consumption is bound to grow in the country, and it will be in excess of 15-20%, because the theme has picked up, and particularly the wine culture is picking up in both both the genders, and pricing has been fantastic. I mean, if you look at the pricing and the quality of beverages they are giving is fairly competitive, and having this is totally with the sensitivity of Indian consumers. So my own sense is the growth rate is likely to exceed as we roll on. I mean, if it is 15% now, it's likely to be 20% or 17% next year, and then 20-22% the year after. So this is one company where you will see increasing growth rate on the revenue and profitability. That way, if you are holding it for a long gestation period, I mean, the period of holding should at least be 5 years perspective, then some multi-bagger definitely on the cards.
Okay, fair point. Any view on the charts? Do you have enough information, Sudeep? I think you had muted yourself. Yeah.
Yeah. Yeah. So see, Sula Vineyards, from whatever little information that is available, see the stock after listing had taken support around 320, 330 zone, and it moved up swiftly up to 500, 520 on the upside, and now it's kind of consolidating at higher levels now. So I feel overall trajectory is good from whatever little information is available post listing, and I feel till 455, 460 holds, this stock could move up to around 515, 520 in the days to come. But 460 should act as a strong support. And if one is already holding this stock, then that should act as a trailing stop loss for the trader.
Okay. All right. I believe we've got a couple of questions coming in on YouTube as well. Deepak Nitrite is a stock that Dhanam wants to know about. He's bought 12 shares at levels of 1,950 on an average, looking for the medium-term outlook. Dharmesh, I'll come to you first on the fundamentals. What's the view?
See, as far as all the chemical companies are concerned, and particularly on the specialty chemical side, the jury is still out. I mean, whether these specialty chemical prices have bottomed out is still not very clear. The demand from Europe has not been there. It's more of just a maintenance kind of a demand which is coming out there. September was a month where there was some price hikes seen because of some demand increase, but October was again a lull period. So going by that, just from one quarter earnings is difficult to judge as of now. But ground checks and speaking to different companies in the chemical segment, which we get a sense that at least this year is ruled out. I mean CY23, and March quarter next year would be more meaningful. Whether the bottom is being made or not, and you have plenty of time. See, my own, Alex, the way I look at it is, I don't mind leaving 10% on the table if the price movement is there, but one should be sure into while entering investment bet. So there, that surety is still not there. And only when the demand picks up in Europe and US, you can see a better positioning of all these companies, which includes Deepak Nitrite. Having said that, if somebody has already invested in it, so there's no point exiting at current levels. So one is advised to hold on to the position. But buying at a staggered approach is also not advised. So hold, buying, I mean, hold is the only recommendation which I can give at current juncture. And one more quarter of earning can only bring clarity on it.
Okay, fair point. Deepak Nitrite on the charts currently trading about 1.2% higher, Sudeep, at 2,102 or thereabouts. What's the view on the charts? Medium term.
Alex, if we see the medium-term charts of Deepak Nitrite, it's quite volatile now. There is a lot of noise if we see on the daily charts, but if we just switch on to the weekly charts and the weekly time frame, the picture gets a bit more clearer. And there is a rising trend line support which is coming in around 2030, 2000 levels. So till the time this zone of 2000 holds, I feel the stock could act positively and the momentum could be on the positive side. But a crossover above 2150, 2160 is required for the stock to really move up to 2350, 2400, where it last met resistance in the month of September. So two levels which are very important for the gentleman, that is 2020, which acts as an important support, 2020, 2040 kind of levels, and 2150 needs to cross and sustain for the stock to move up to 2300, 2350 levels.
Okay. The next question is on YouTube and it's coming in from Sachin, and he's asking about Gujarat State Petronet. He's bought this at levels of 300, so he's lost a little bit of ground right now. The stock is currently trading at just about 275 or thereabouts. It's up about 1.7% in trade. On the fundamentals, what's the view on this one, Dharmesh?
Again, I mean, valuation-wise, it's still, comfortable valuation is placed on that. But we are just avoiding, all these companies at the present juncture. So I won't be able to comment much on it because it's in a negative list as of now.
Okay, fair point. What's the reason behind it being in your negative list? Is there some trigger that has forced it?
Yeah, yes. So I can't disclose that.
Fair point.
But,
okay. Okay, ठीक है. All right. Let's take a look on the technicals at least. Sudeep, is there anything that you can tell our viewer?
Sorry, I just got disconnected in between. What is the stock?
Gujarat State Petronet is the name of the counter.
Yeah. GS.
Yeah, bought at levels of 300.
See, the stock is in a kind of a consolidation with a negative bias. So if I see the previous trend in from August 2021 to November 2022 was down from 370 to 220. Post that it retraced somewhere around 38 40%. And now, last few months, we are seeing that the stock is forming a lower top formation on a weekly charts. So I feel till the time 290, 295 levels are not crossed, we could see lower levels of 240, 250 on the downside. And I concur with Dharmesh's view that we need to avoid this stock and look for better opportunities in other counters which are right now available.
All right. We've got another question coming in on the chemical space, and Rajesh is asking about SRF in the chemical space. He's holding 110 shares at prices of 2,249. He's looking for a short to medium term outlook. So first, let me get the view on the charts, and then I will go to Dharmesh on the fundamentals. Sudeep, how does it look?
See, the chart of SRF looks much better. See, compared to Deepak Nitrate or other chemical stocks, I feel SRF looks much better because post a big uptrend, say in 2021 and a large part of 2022, the last 1 year we have seen the stock trade in a range between 2100 and 2500. However, the zone of 2050, 2080 has never got breached in the last, say, almost 1.5 years. So the stock is forming a strong support around this zone of 2100. And last few days, we've seen chemical stocks coming back in action, the stock forming, say, kind of another reversal move from the lower levels with volumes. And I feel currently the stock is bullish until 2250, 2260 holds. The stock could continue moving higher up to 2480, 2500 on the upside.
Okay, fair point. Any quick view that you can give us on the fundamentals for SRF, Dharmesh?
I mean, the view is same for all the chemical companies, which includes SRF, his businesses of technical textile and everything. I mean, numbers were not great, and we would like to give it a wait for next 2 quarters before some meaningful buying can be emerged. It was more of a hope trade and trading buys which happened in most of the chemical companies when they rolled out their Q2 earnings. So. I mean, all the segments, none of the segments performed for SRF when they reported the Q2 numbers, be it technical, textile, or polymers, or packaging, film. Nothing very great, yeah.
Okay, fair point. We've got a number of questions coming in. Girish, Kunal, as well as Parth have asked questions. I'm going to take Girish's question first on IRFC. The entire railway pack, I think this year, if we can call it that, has been the stock has been the year of the railway stocks. IRFC was bought by Girish at levels of 500, and he's looking for a long-term. Sorry, apologies. He's bought. Let me just see where the price is. He's bought at levels of 80. My bad. He's bought 500 shares of IRFC at the price of 80. The stock is currently trading at 73.85. Dharmesh, what should he do on the fundamentals?
He should be holding it. I mean, the entire railway pack has been budging, and that is because of the spends which are done by the government of India. And the next budget onwards, they would see an increase of 20-25% on an annual budgetary spend on the railway. So that is what has been laid out. But that depends on the government which comes into the power and the continuity of the policy which is there. Having said that, I think IRFC is still, I mean, compared to other financial companies, if you, compare that, it's still very cheap, 2 times price to book, and if forwarded it is 1.7 to 1.8 times. So I think if there is a further correction, one should be buying it in a staggered approach. And it's a buy and hold for 2 years perspective, then definitely 30-40% can easily be made. 110, 120 is the price target we are looking at IRFC from FY26 earnings perspective.
Okay, we've got Kunal that has bought Adani Wilmar at levels of 230, and the stock is currently trading at 295.5. I look at the last month or so, and the stock is down about 14.5%, but it's still above his buy price. What should he do on the technicals, though? Sudeep, I'll come to you on this one.
Alex, if we see the chart of Adani Wilmar now, in the month of from February 2022, this stock moved up to 800, 850, but from there it's a steady decline. The 200 DMA has not even got breached once on the upside after Jan 2023 once the stock broke below 650 levels. So from that zone, it is in a steady downtrend, and the uptrend downtrend is getting stronger day by day. So I feel this stock should be avoided. We should not be doing any bottom fishing, and if anyone is holding this stock, even in terms of any hope trade. So I feel that is also wrong. So one should exit this stock and buy quality names which are right now available for cherry picking.
Okay, fair point. Let's take up Ashok Leland then. We've got Parth Gaonkar who's asking about this counter. He bought at levels of 105 in November and he's looking for a long-term view. We just had the earnings yesterday. Dharmesh, what did you make of it? MNHCV sales looking decent and giving, I think, investors some bit of hope that things are looking good for the sector.
Yeah, even for the month of October, the sales were quite decent for Ashok Leyland. And if you look at, see, Alex, if you look at last 6 to 9 month kind of a period, what Ashok Leyland has been doing is they are garnering the market share from the competitors. So overall, the MSCV sales for the market has not grown that way, the way, sales of Ashok Leyland has grown. And that is particularly because Tata Motors has been losing their market share in MSCV segment, and where this company has been gaining fast. And with the EV rollouts, and I mean, that's definitely in future, but they are planning and going very aggressive about that, and the tie-ups are already in place. I think this is a very good value buy company from a long-term perspective to hold on to. Not only IC engines, MSCVs are going to do well, but they are one of the pioneers in the EV trucks and buses rollout going forward. So it's definitely a buy and hold kind of company. As of now, the valuations will not be justifiable, being given the P multiples it's trading at, but that's more to do with the future compounding of the growth. We think around 25 to 30% is the bracket where a CAGR of PAT earnings for Ashok Leyland will come from FY24 to FY26. So that is what we are expecting from Ashok Leyland. And it's from our end, it's a buy and hold kind of a recommendation.
Fantastic. Would you say the same thing about IRCTC for somebody who's bought at levels of 275? We got a view on YouTube, Nitin, who's bought at levels of 275 and he's looking to hold for another 2 years, I believe. What should he do? Should he do that? Dharmesh?
Yeah, definitely, Alex. IRCTC is more of a monopoly kind of a business, so they don't have any competitors. And the biggest advantage, though this time in earnings, the consistent fee did not contribute that handsomely, but that's subject to government, decision. Just a simple 5 or 10 rupee tweaking can take its earnings up by 30 to 40% on a console basis. And the other divisions, the catering division, has been doing phenomenally well. That did very good this time around, and it's likely to grow further because with the kind of trains which have been rolled out by railways, the Vande Bharat and all, so people are now again back to railways for short journeys rather than flights. So, and it's a very luxurious as well if you travel in some of the niche trains which has been rolled out. And rail division, the water division has also been doing well. So definitely, if 2 years period is, holding period is there, the person should be holding into it. And decent gains are expected. I think post-election, you can see some action in IRCTC when the concession fee is revised further.
Okay. Gentlemen, last question is from my side. And on behalf of all the viewers, I'm going to ask for your Diwali picks. Heading into the new Samvat, which according to you will be the top stocks to watch? I'll start with you, Sudeep, on the charts. What's looking most attractive?
Rather than the charts, I would just say, along with the charts, I would say that there is something picking up in the power space. Now, last few sessions, we have been seeing power stocks making a move, and I feel Tata Power, after a long consolidation, is now trying to break out. The results announced a few days back were just amazing. And it's just right now still consolidating around this 240, 250 mark. And I feel on dips, Tata Power could be a good pick from here on with a 225 stop loss and a 300 target on the upside. And I would like to add one more stock here, which the viewers should keep an eye on, and that could be Hindustan Aeronautics Limited. Now, we know that the defense theme has already run, but this stock is now giving a fresh breakout technically on the upside after consolidating for the last 6 months from June, at least 4 months. So post this move, we feel that the stock could continue to head up to 2350, 2400 on the upside, and one can buy this with a stop loss of 2020 on the downside.
Okay, Dharmesh, what are your picks for Diwali?
Yeah, I will quickly run you through. See, we have recommended 4 picks 10 days back for Diwali, and the stocks are Reliance Industries, RVNL, HL, and Poonawalla Fincorp. And the idea before the selection was that there are 3 macro events which can disturb the market. One is geopolitical, other is the macro global slowdown, and the third is the domestic state and central election. So, having regard to these 3 factors, we selected companies which would be fairly insulated from any of these events playing out. Where we think Reliance Industries, RVNL on the railway side, HL, which our friend has also pointed out, Hindustan Aeronautics on the defense side, and Poonawalla Fincorp on the financial sides are likely to be fairly insulated, and they are good value-wise. 30 to 40% kind of a price appreciation we are expecting from this Diwali to the next Diwali.
Fantastic. Gentlemen, that brings us to the end of this particular edition of Ask BQ. Thank you so much for joining in, and once again, wish both of you a very happy Diwali. All right, viewers, that brings us to the end of this edition of Ask BQ. Thank you so much for taking the time and for sharing the last half an hour show with us. Remember, we're live through the week on every market day at 11:30, and we take all of your stock-related questions. So tune in live on Monday. I'll see you there. Do stay tuned. This is BQ Prime.
Okay, and to all my friends in India, so personal friends and clients and all the media friends, I wish you a happy Diwali, a very colorful one that will bring you light, peace, and joy to you and to your loved ones. Thank you.